Hello everyone, welcome to my channel. Today we are going to talk about the stock market. I will explain it in such a simple way that even a beginner can understand it. By the end of this video, you will have a clear idea of how the stock market works and how you can start trading. So let's get started. First, what is stock market? Let's take a simple example. Imagine a vegetable market. Buyers come to purchase vegetables and sellers come to sell them. Similarly, in the stock market, buyers and sellers trade shares, but instead of vegetables, they exchange shares of companies. Now, what are shares? Shares are small pieces of ownership in a company. When you buy a share, you become a part owner of the company, even if it is a very small percentage. For example, if a company has 1 lakh shares and you own one share, you own 1 lakh of that company. Next, let's talk about two main stock exchanges in India. These are the places where shares are bought and sold. The first in NSE, which stands for National Stock Exchange. It is the most active stock exchange in India with a high volume of trades every day. The second is BSE, which stands for Bombay Stock Exchange. It is one of the oldest stock exchanges in Asia and is known for its historical significance. Both NSE and BSE allows us to trade shares, but NSE usually has more activity. Now, who are the people involved in the stock market? There are 5 main participants. First, there are retail traders like you and me, individual peoples who invest in the stock market. Second, there are NRIs or non-resident Indians who live in abroad but invest in Indian stock markets. Third, there are asset management companies or AMCs like SBI Mutual Fund, which collects money from investors and invest in the stock market. Fourth, there are domestic institutional investors like LIC, which also pool money and invest it. Finally, there are foreign institutional investors or FIIs who brings money from outside India and invest in our stock market. All these participants contribute to the market's daily transactions, which are worth thousands of crores. But how does the market stay safe? That's where SEBI comes in. SEBI, or the Securities and Exchanges Board of India, is the government body that regulates the stock market. SEBI makes sure that everyone follows the rules and that the market is fair and transparent. If there's any cheating or fraud, SEBI steps in to protect investors like us. So how can you start trading in the stock market? It's very simple. You need two accounts to begin. First is a trading account, which is used to buy and sell shares. Second is demat account, which is where your shares are stored electronically. Let me give an example. If you want to open an account with a broker like Angel One, Zerodha, or Group, you will need to provide your PAN card, Aadhaar card, bank details, and the photograph. Once these details are verified, your trading account and demat accounts will be set up and you can start trading. Let's take a practical example to understand how trading works. Suppose you have 50,000 rupees and you decide to invest in a company like Titan, the makers of Titan watches and Tannish jewelry. Let's say the share price is 500 rupees. You can buy 100 shares with your 50,000 rupees. After 2 months, the price of Titan shares increases to 600 rupees per share. Now, if you sell your 100 shares, you will earn 60,000 rupees. That's a profit 10,000 rupees. But remember, brokers charges small fees for their services and government taxes also apply. These charges will be deducted from your profit. For example, if the charges add up to 200 rupees, your final profit will be 9,800 rupees. Always account for these charges when calculating your returns. Now you might wonder what happens if a broker cheats. Don't worry, your investment are safe. Systems like NSDL and CDSL, which are approved by SEBI, securely store all demat accounts details. If anything goes wrong, you can file complaint with SEBI and they will take action to protect you. Before we wrap up, let me give a few tips for new investors. First, start small. Invest a small amount of money to learn how the market works. Second, always research on companies you want to invest in. Look at the financial performance and growth potential. Third, diversify your investments. Don't put all your money into one stock. Spread it across different companies and sectors to reduce the risk. Fourth one is be patient. The stock market rewards those who stay invested for the long term. Finally, avoid some common mistakes. Don't trust tips or rumors from unverified sources. Always do your own research. Don't panic during market fluctuations. Remember, ups and downs are normal in the stock market. And don't invest money you can't afford to lose. Always have a backup plan for your financial needs. That's how the stock market works, and you can see it's not as complicated as it seems. With the right knowledge and approach, anyone can start trading and investing. In the next video, we will discuss how to pick the right stocks and strategies for long term wealth building. Until then, follow me for more financial insights. I am your friend, and I will see you in the next video. Thank you.